Hello, good afternoon. You've tuned into Your Stocks coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in as always. Now, a quick look at what the market is doing, right? Market is managing to hold on to the gains that we've seen coming in. As of now, Nifty is just holding on to that 25,000 mark of the day's highest point, but nonetheless, 0.1% of gain is what the Nifty is managing to hold on to. Nifty Bank, that's what's pulling up the market, right? So ICICI Bank, HDFC Bank, Kotak Bank, all these private banks are managing to hold on to gains and overall supporting the markets in terms of its up move in today's trading session. Now, let's not forget that what you're looking out for right now is in terms of the mid and small cap. That also is managing to do decently well in today's trading session. Not much in terms of an outperformance there, but at least largely the mid cap is doing better than the Nifty. But the small cap, that's a bit of an underperformance. So yes, advance decline ratio as of now is almost equal, slightly bit more in the favor of declines versus advances is the current situation as of now. But yes, that's what the market setup is looking like so far. We'll watch out for the next half of the trading session as well. In the next couple of hours, what's going to be happening to the markets will be key to watch out for. But this is a show where we solve all your stock-related queries. And to do just that, we have Ashish Kyal, market technician and author of Wave Strategy Advisors, as well as independent market expert Shahina Mukadam joining in with us to answer all your stock-related queries. So Shahina as well as Ashish, good afternoon and thank you so much for joining in with us. Let me get started with those stock-related queries coming in. And this first query for today is coming from Sundar Rawat, who is writing to us from New Delhi. Now, he is holding 150 shares of BSE. But before I, come to that query, I think we have some important flashes coming in. Now, IndusInd Bank is saying to CNBC-TV18 that they are firmly denying reports of RBI asking to expand CEO search. Now, that's the latest update. Right now, we're seeing IndusInd Bank that is down in trade as well. So this is the latest update that we have coming in here. Keep an eye out on this one. They're firmly denying reports of RBI asking to expand the CEO search. The appointment of the new MD and CEO, including seeking relevant approvals, is still in the process. So keep an eye out on that. The process is still on, is what IndusInd Bank has told so far in terms of the word that is coming to CNBC TV18. So that will be important to watch out for. The bank will continue to make necessary disclosures as required under the law at an appropriate stage. Important updates coming in there from IndusInd Bank. Keep an eye out on this one. As of now, the stock has seen a mild uptick from the day's lowest point. Bit of an uptick furthermore in the last few minutes as well is what we could watch out for right now. But yes, that's IndusInd Bank that we'll be keeping an eye out on as well. But let's get started with those queries then. So I was talking about the first query for today that's coming from Sundar Rawat, who's writing to us from New Delhi. He's holding 150 shares of BSE. The average price is 791 rupees per share. Long-term story, how does the stock still look for this one? Shahina? BSE, these names have done very well, the capital market names, and specifically BSE as well. What are we watching out for furthermore? Should they continue to hold this for the long term or maybe book out some bit of a profit?
Well, see, I've also been holding it for a very long time. And while I have booked part profits, so I don't say that, I don't say that you shouldn't at any point in time, but I would continue holding a lot of the portion for the longer term. Couple of issues, the recent one being that Jain Securities has been allowed to again, trade on the markets. Basically, there was a halt put on them by SEBI. But now that they have deposited the escrow amount, I believe from today they have been given permission to restart operations. We'll have to see how that goes in the longer term. They will have to be the investigation will still be on, so we'll have to see. Other than that, on fundamental basis, you have NSDL, you have NSE. These are the issues that will be traded on only BSE at least for some time post listing. So I think to that extent, those are the positives. Valuation, shorter term, very short term, yeah, it may look a bit expensive. But if you look at the longer term, like, 1 year down the line, it's about 25 times P. I don't think that's too expensive. So I would say continue to hold. If you need some money or if you want to book some short-term profits, you can, but otherwise you can hold for the longer term.
Okay, you can continue to hold for the longer term coming in for BSE. That's the view on the fundamental front. Ashish, your view for BSE as well. Is it similar? Should the viewer continue to hold it?
First of all, I would like to congratulate the viewer because he's holding from 791. It's not very often we see the retail participants holding the stock all the way for a multi-bagger kind of a thing. It's nearly three times from there. And as of now, there are no signs of the reversal in the medium to long term trend. So there is short term correction that we saw from 3,000 levels. The stock made a low of around 2,400, but I think that's temporary and the overall outlook still remain bullish. My suggestion would be continue to hold. There is no time to worry here, and we can expect the stock to reach towards the level of 3,200 again on the upside. On the downside, one can maintain a stop loss, which is going to be around 2,200 levels. So the undertone is still a buy on dips for the stock.
Okay, buy on dip still for the stock as well. So interesting strategy there. Continue to hold for the long term. That's a view for BSE overall. Let's move on to the next query for today. Sandeep is writing to us from Pune. He's holding 300 shares of Bajaj Housing Finance, and this is at a price of 182 rupees per share, and 25 shares of Trent, and this is at a price of 6,700 rupees per share. So overall for this one right now, in both the stocks, they're making some bit of a loss. Wants to know the long-term strategy that comes into play for Bajaj Housing Finance as well as for Trent. Shahina, your view, Trent and Bajaj Housing Finance, what should they be doing now? And Trent is one of those names, where they bought it at those higher levels. Normally, you've seen people make a lot of profit on Trent already over the last few years. So now what should they do?
Yeah, unfortunately, both these stocks are good quality stocks, but the valuations are very high. So if you look at Bajaj Housing Finance, for example, it is 5 times price to book, which is much more expensive than the rest in the category. Similar story for Trent. What I would say is that while both these stocks are doing well, Bajaj Housing in terms of growth, they are showing 25% growth. 2 days down the line, they are the results for the first quarter. I think the 25% growth is likely to sustain because they have raised funds and this will fuel their growth. But at the same time, I would say that it's better to switch. There are cheaper stocks available in the housing finance of equally good quality. Trent also similar story. The Zudio is impacting the margins. Valuations are a bit high. So if you want to add or average, better to average it at least 10% lower from current levels. Or, if you're holding for the long term, then yeah, these two stocks, you can continue to hold. But I would suggest a switch from both if you're looking at shorter to medium term.
Mm-hmm. Okay, that's a view there, but on the fundamentals. But Ashish, Trent for you as well, and Bajaj Housing Finance also, anything that you are looking at over there right now? I know not much there, but what is your view?
Exactly, because if you look at Bajaj Housing Finance, I think the stock has just moved in a range of 128, 129 levels on the upside. And on the downside, the lower end of the range is around 116. That's a very narrow range within which it has been moving since, I think, nearly May onwards. And as of now, there is no directional move. So my suggestion would be continue to hold as of now, keeping 116 as a stop loss on the downside for Bajaj Housing Finance. And in case the stocks manages to break that level of around 128, 129, we can expect a good upside move from there on. For now, there is no, it's a no trading zone from investment. Continue to hold for now with the stop loss given. And as far as Trent is concerned, we saw a very big gap down on 4th of July, post which the stock is consolidating. The time horizon has to be extended at least for more than a year if you want any kind of a positive outlook on this stock. And we can expect a range bound movement between 5,800 and 5,200 levels. So that's the range within which I think the stock can move. As of now, continue to hold, maintain a stop loss of 5,200. If the stock breaks that level, then better to be exit from here.
Okay, that's a view coming in there for Trent and Bajaj Housing Finance. Let's move on to the next query for today. We have Abhishek who's writing to us from Kolhapur. He is holding 108 shares of DreamFolks. It's at a price of 234 rupees per share. Wants to know whether he should continue to hold this one or exit the stock. DreamFolks, your view coming in for this one, Shahina. Obviously, we've seen those recent issues that came in for the company as well. And in the last 1 month itself, the stock is down 32%. What should the viewer do?
Yeah, unfortunately, even after the sharp correction, I would still say fundamentally it's better to exit. Look for some other story. Basically, they are facing increased competition from Adani itself, Adani on the airports, and that is their major bread and butter. And they have lost some of their key clients starting from July. Some like I believe ICICI Bank, Axis Bank. So and there is like a pressure on their margins. So, it's better to switch.
Okay, you would say a switch. And DreamFolks on the technical front, Ashish, for you as well?
Very similar view because the stock started correcting from 300 levels in the month of May. It's already 150 to 50% cut in just 2 or less than 3 months of time. It's not a very, very good sign. So it's best to be out from here. It is already breaking the prior day and prior week's low also in today's session. So best to be out from here and look out for alternatives. Possibly in the space of maybe something in an automobile or a banking space, something like an ICICI Bank, and from automobile sector, maybe Mahindra and Mahindra. It's better to be diversifying into that space.
Okay, that's a view coming in there for DreamFolks on the fundamentals and technical front. But IndusInd Bank, like I was talking about that one as well. Now, IndusInd Bank, in a response to CNBC-TV18, has denied reports of expanding its CEO search. Ritu is joining in with us to give us more details on this one. Ritu, after we actually flashed this on the screens, we've seen a bit of a spike up that came in for the stock as well from the day's lowest point. What does this mean? What is this entailing? And what is the clarification we have gotten here now?
Well, Winnie, in summary, IndusInd Bank is really reiterating that the CEO selection process remains on track. There were some concerns this morning because there were certain reports that had suggested that the RBI had asked IndusInd Bank's board to expand the CEO search because there was some concern or some hesitation on the part of some of the so-called shortlisted candidates in taking up the assignment, and therefore RBI had, according to this report, asked the board to also look at additional candidates, including public sector bankers and even bankers of Indian origin who are working abroad. However, IndusInd Bank has now come out in a clear, statement to us where it has said these reports are false and they're speculative. It has said that the appointment of a new MD and CEO, including seeking the relevant approvals, indicating approvals from RBI, remains in process, and the bank will make, disclosures at an appropriate stage. Keep in mind, in the last week of June, that is when the RBI given deadline for the bank to submit CEO names really was. That is when we were the first to report that there were 3 names that had been submitted to the Reserve Bank of India, including Rajiv Anand from Axis Bank, Rahul Shukla from HDFC Bank, and Anup Saha of Bajaj Finance. We've been given to understand these 3 names which were submitted by the board remain under RBI's consideration, and the approval on one of these candidates is expected in the coming few weeks. Remember, we had also reported that the RBI is going to expedite the CEO name approval process simply because of the unique situation that IndusInd Bank currently is in, where it doesn't really have a CEO. The deputy CEO also resigned along with Sumant Katpalia, and the bank is currently being run by a committee which is being guided by the board in turn. So RBI also wants to expedite, the appointment of a new CEO, and these 3 names remain under consideration, with IndusInd Bank really saying that reports saying otherwise are false.
Okay, Ritu, thank you so much for that update coming in here. That's a word coming in from IndusInd Bank to CNBC TV18, and obviously the appointment of ND and CEO, the process is still on. There's nothing of an issue on that front coming in there. So you'll wait out for more details coming in on that front. But on that note, we're going to step into a very short break. We'll come back with more queries on the other side. Welcome back to your stocks on CNBC TV18. Let's keep it going with all your stock-related queries, and we still have our experts Ashish, Kyal, as well as Shahina Mukadam. Let's move on to the next query for today. We have Girish Kumar, who's writing to us from Dubai. He's holding 100 shares of MRF, and this is at a price of 1,07,915 rupees per share. So he wants to know the outlook for the stock. Should he continue to hold or exit? MRF, what's your view coming in on this one, Shahina?
Yeah, he should continue to hold in my view, because we've seen a sharp correction in rubber prices in the last 3 months. In line with that, of course, the price of MRF has also started moving up. But I believe that the balance sheet is very strong. Valuation's not too expensive. EV by EBITDA 10 times FY27, price to book about 2 times. So he can continue to hold even at current levels.
Continue to hold even at current levels. That's over there. And Ashish, your view coming in for MRF?
See, it's not very often we get a question on MRF.
Yeah.
That the stock is trading at around 1,48,000 levels, no split even up. So the overall trend for the stock still remains positive. I think there is a possibility the entire auto ancillary and the tire space, I think, is doing very well. If you look at C8, if you look at MRF, if you look at other stocks also, I think MRF has continued to outperform. We can expect the stock to reach towards the level of around 1,65,000 also on the upside. And on the downside, the support for the stock is going to be around 1,40,000. So hold on over here. The medium to long term outlook remains strong, and I think the auto sales will also start picking up eventually, given the lower interest rate scenario, which will also help the auto ancillary stocks to outperform from here on.
Okay. That's a word coming in there for MRF. Let's move on to the next query for today. Unicommerce. That's the next stock we'll talk about. Sumit Ghosh is writing to us from Noida. He's holding 500 shares of Unicommerce e-Solutions. Price is 210 rupees, making a loss on this one. Wants to know if he should continue to hold or just book his losses and get out of the stock. Shahina, what's your view coming in for Unicommerce? Because I don't think, like, in terms of overall returns also, it's managed to give anything to investors since its listing. Post that we've seen those ups and downs, and more of downs that has actually come in for the stock since listing.
Yeah, you're right, Vinny. Actually, but now it has been consolidating after having given up most of its, the listing gains. But if you see, I think this is a concept stock. Though even while valuations even today are expensive, the space in which it's operating, I think that potential is huge. They're SaaS platform for e-commerce companies, and there I believe the opportunity is large. It's a small cap company, just about 1,350 crores type of market cap. So these type of companies, I would say you should continue to hold for the long term.
Okay, continue to hold for the long term. And also, Shahina, would you say that averaging makes sense right now? Because the price is much lower than what they bought it at. Right now, it's just at 127. They bought it at 210. Then would averaging be a good bet?
Yeah, if you have a long-term perspective, I would say averaging would make sense. But then you really have to hold it for the long term.
Okay, then you have to be committed to holding it for the long term there if you just start averaging out. But Ashish, your view coming in on this stock as well. What should the viewer do now?
See, the stock corrected from the levels of 250, made a low of 100, and it has been consolidating in a zone. On the downside, the support for the stock is around 117. And on the upside, it has failed to break above that 145 mark. So that's the range within which it is consolidating. But yes, the downside momentum has reduced. I think eventually the stock should reverse back on the upside, and one can average it here. Maintain a stop loss of 117 if you are looking at from a short-term support perspective, and above that level of 145, if the stock manages to break, we can expect a good upside momentum towards 175 levels. So trade on the basis of these levels.
Okay. Keep an eye out on those levels over there for Unicommerce. But let's move on to the next query for today. Dhruv is writing to us from Ahmedabad. He wants to know the long-term view for 3 to 5 years. This is long-term what he's talking about for DAM Capital. Should he look at making an investment here? Shahina, your view?
I think he should wait for 2 days. Wednesday is the results for the Q1. Actually, what has happened is that if you see 2 years, not much history in terms of financials that we have. Yeah. Still, if you see 2 years, there was a good growth, good numbers. But post the listing, which is recent listing, actually first quarter numbers of March were very disappointing. So I think you better wait, see what the management commentary is, and then look to invest. So wait for now.
Wait for now is the word coming in there. And Ashish, your view, I know there's not much history in terms of charts or anything, but what was your suggestion? Because it's a long-term investment query.
See, if you look at the charts, I think the stock has failed to move on the upside. It's breaking the previous low made in the month of on 19th of June also. It's just about to break that. It's better to be out from the stock here. And maybe something like an AB Capital looks much more promising, given that the stock has a good history, has shown a very strong rise as well, and an impulsive move on the upside. So I would suggest to be out from DAM Capital, park somewhere, something like an AB Capital. That makes more sense.
Okay, that would make more sense for you right now. That's a word coming in on the technical front. But that was the last query for today. So Ashish as well as Shahina, thank you so much for joining in with us as always, helping our viewers solve all their stock-related queries. And viewers, as we're going to wind down this edition, you have the numbers of IDBI Bank that are flashing at the bottom of your screens. So wait out for there. That seems like NI is down 2%. Net profits has seen a bit of an increase. We'll wait out for the asset quality. What's that on that front? Will be coming in closing bell, which is up next to take you through the last hour of trade, so don't go anywhere.